Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Satellogic, a company that takes pictures of Earth from space. Sounds cool, right? Well, get ready for some financial maneuvering that might leave you seeing stars, but not in the good way. This report, filed on April 9, 2025, is what's called an 8K. Think of it as an alert for big changes at a company. In this case, it's about how Satellogic is selling its stock. The main event here is a new agreement that Satellogic made with two companies, Cantor Fitzgerald and Northland Securities. These companies will help Satellogic sell up to $50 million worth of its stock. It's like hiring a real estate agent, but for company shares. This isn't the first time they've done this. This agreement is actually the second version, which means they've tweaked it along the way. It's called the Second Amended and Restated Sales Agreement, which is a fancy way of saying they've updated the original deal. One of the reasons for this new agreement is that Satellogic changed its home base. They used to be based in the British Virgin Islands, but now they're officially a Delaware company. It's kind of like moving from one state to another, but for a business. This move required some updates to their stock agreements. They changed all mentions of Class A ordinary shares to Class A common stock. It's just paperwork, but important paperwork. Now, here's a key point. Satellogic doesn't have to sell all $50 million worth of stock. They can choose to sell some, none, or all of it. It's all up to them, depending on what they need and what the market looks like. Cantor and Northland, the companies helping them sell the stock, will try their best to sell the shares at a good price. They'll use their normal methods, but they have to follow the rules and regulations. They can sell these shares at the market. This means they'll sell them at whatever the current price is, like selling something on eBay at the buy it now price. This type of stock offering is called an at-the-market offering, which is allowed under a rule called 4515-4 of the Securities Act of 1933. Don't worry about the number, just know it's a legal way to sell stock little by little. For their help, Satellogic will pay Cantor and Northland a fee. The exact amount is in the sales agreement, which is included as an exhibit in this report. Also, Satellogic has to protect these companies from any legal trouble that might come up because of selling the stock. This is called indemnification. As part of this filing, there's also legal opinion from a law firm called King and Spalding. They're basically saying that it's legal for Satellogic to issue and sell these shares. It's like a lawyer giving the thumbs up. This section lists all the extra documents that are attached to the report. These are called exhibits, and they give more details about the agreement. Now, let's step back and look at the big picture. Satellogic is a company that provides satellite imagery, which means they take pictures of the Earth from space and sell them to other businesses and governments. They're in a growing industry, but it's also a competitive one. Selling stock like this can be a good way for a company to raise money. They can use that money to invest in new technology, expand their business, or pay off debts. However, it also means that the existing shares of stock are worth a little less because there are now more shares out there. It's like slicing a pizza into more pieces, each slice becomes smaller. From what I can see, Satellogic might be trying to get some extra cash to fuel its operations. The space industry is not cheap, and taking high-quality pictures of Earth requires expensive satellites and equipment, so raising $50 million could help them stay competitive. But here's the thing, repeatedly selling stock like this can signal weakness. It might mean they're not generating enough cash from their regular business to cover their expenses. It's like constantly borrowing money from your friends eventually. They'll start to wonder if you can manage your finances. There are some risks to consider. The space industry is risky, and there's always a chance that a satellite could fail or that a competitor could come up with a better technology. Also, the economy could slow down, which could reduce demand for satellite imagery. On the other hand, there are also opportunities. Satellogic could win new contracts with governments or businesses. They could develop new and innovative products, or they could find ways to cut costs and become more efficient. Overall, Satellogic seems to be in a bit of a tricky spot. They have a promising business in a growing industry, but they also face some challenges. Selling stock can help them in the short term, but they need to find ways to become more profitable in the long run. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, please hit that like button, leave a comment with your thoughts, and subscribe for more insights into the world of business and finance. Until next time.